How's it going, everyone? Today is September 6th, 2024, the end of a red week in the markets. We'll jump right into it. We got the SPY on the screen here. With the big down move today, down 1.68%, we dipped back below the 50 period SMA here, which is significant for the market, coming back down to previous resistance levels that were tested back before when we were still making all-time highs. Um, Similarly, in the Qs, we've been below the 50 period for this whole week. Actually, on the Qs, we opened on Tuesday, flushed down a couple days, consolidating, flushed down further today. So we're pushing to the downside. It seemed to be in a shorter term downtrend. I know that saw a tweet earlier today. We're down more than 10% now, once again, from the all-time highs we were at back in the middle of July here. So back into correction territory for the market. Here's a look at the 15-minute on the Qs. We were kind of consolidating in a similar area, and then we broke to the downside, and then held this bottom, and today, even though we were up in the pre-market, flushed back down at the bottom. We'll pop over to the SPY to take a look at that as well. Similar story, consolidate. This was the day, this candle, where this red line was kind of the top of that channel that we'd been in, and I felt that it would have been preferable if we closed above this 564 level. We didn't on that day, which didn't give me a ton of optimism about the probability of a continued up move before further consolidation. And lo and behold, that next trading day we fell down, consolidate, and then we fell down again. Just know this today was on the heels of this morning at 8:30 Eastern. We had the non-farm payrolls and the U.S. unemployment data come out. Non-farm payrolls came out lower than expected. U.S. unemployment rate was right in line, and initially the markets loved it, and then once the actual opening bell sounded, we quickly moved back down to the downside. For the individual stock play for today, I'm just going to look at Tesla. Anyone that's been following the markets this week would know that in the last couple days, Tesla has just flown to the upside, going up more than 10% in the last 2 days, prior to today, of course. Shot off the open on that Wednesday. Yeah, on Wednesday we shot up from 210, getting as high as 222, pulled back a bit, jumped up in the pre-market, jumped from 223, 222 up to 235 yesterday, pulled back, consolidated the highs. And then we were going to push up against that 235 again. In fact, I believe we got within 25 to 50 cents of it. Yeah, it looks like we topped out around 64 to 70s. So around 30 cents shy of 235. I'm following the non-farm payrolls data, and then we just flushed off the open. So we'll take a closer look at this for the actual play, the actual trade today. This is just basically a consolidation breakdown off the open. With the volatility, it's often I find it very difficult to get into trades with a lot of conviction unless you get a really, really strong break through a resistance or a support level and in the corresponding direction that you see on the tape, that there's strength and you feel like you can join the trend. In this case, we tried to push up initially, and then we just flew to the bottom. In the first 2 minutes, we're down $3 off that opening price. And so we're falling. You never want to catch a falling knife. We start to show some strength or some willingness to bounce, some bids coming in at the 224 level. Fall down a little bit more. The 223 level shows a bit of strength, and we get a $2.5, $3 bounce off the 223. We come back down to it. We touched a couple times, bounce a little bit, but then here we see this. Here, we'll zoom in here. Okay, yeah, 223 bounce, 223 bounce, not as high. And then this is sort of a bouncy ball breakdown, as I would call it. I would not put it in that same category because the bounces weren't as high or as prominent as you'll see sometimes, but this still follows a similar pattern. I just end up calling this a consolidation breakdown because we're consolidating right on top of this 223 level. And then finally we come back to the downside and we get this big, tall-bodied down candle through the 223 level. Most importantly, the volume. So the volume had contracted this whole time, showing less and less people buying as this consolidation continues, and the bounces are getting lower and lower, and then bang, we're through that level. We get more than double the volume of the previous 1 minute candle, and we're falling. We fall from 223 down to 221, so we get a $2 fall in the next 2 to 3 minutes. And so then that is one entry point right at that break. The volume and the price action to the downside, including that prior volume having been contracting to the downside, are all checks in our favor to take this short the low of the day. And then you see that we get a bounce below. So we catch some bids at 221, bounce all the way back up to this level. Try to break above 223, rejection. Break above 223, rejection. Break above, rejection. Break above, rejection. And then after following this tall green candle, we get this big, almost a bearish engulfing candle to the downside. And so then this price action would give me further confirmation that we're going to continue to the downside, just because we fell below that support level of 223, and now it's showing strong resistance there. And so then short down in around here, or add to the position from before. Our stop would have been maybe up above 224 and a half, close above this period of shorter consolidation is probably where I would have put a stop. Heck, you could even put a tighter stop above the high of the candle before the breakdown candle. Once you get over here and you're adding, you would put your stop above the 223 level where we were starting to break, maybe just above the highs of these, 223.10, 223.30, somewhere in that range, depending on how aggressive you want your stop to be. And then we never see that 223 level again. So we fall down here, consolidate a bit. Volume actually doesn't come in back into the name like it did previously until we get over to these this candle here, breaking down this little consolidation we see here. And then we get similar action to over here. We break below this on volume, fall down, get popped back up to that same level right around 220. The tall-bodied green candle with tons of volume, but we reject that 220, and then we're back down. And the rest of the day we fell on this name. Tesla closed at the lows of day, so you pretty much could have shorted this any time of today and been correct. But I felt like this break of this low of the day at 7:11 Pacific time was the best entry for confidence, and confirmed by the rejection and that price to the downside. So even if you got in at this 223 level with a 30, 40, 50 cent stop, maybe even $1 stop, depending on how much room you want to give it, you ended up closing the day at 210 and a half. That's a whole $13. That's 13 to 1 or 26 to 1, depending on if it's a 50 cent stop, $1 stop. So as far as taking profits for this, you could potentially take some off the table or get completely out of the trade if you have a bounce in the name that takes out a previous lower high. So you see the initial high was here, then we have bounce here, so that's a lower high here, a lower high here, a lower high there, a lower high there, lower high, lower high, lower high. So none of the lower highs throughout the whole entire trading day ever actually violated the previous lower highs. So you, in theory, could have held onto a piece of this name for the entire move, which would have been an amazing win to be a part of. I only captured a small part of it, but that's all part of the learning process. So you want to hold your winners as long as you can. The best way to do that would be to create a system in which you have strict rules as to when and why you would get out of trades, and reasons to stay in trades, and ways to know that it's good to stay in the trade, which are things I'm still personally working out, but that's the whole point of doing stuff like this. So that was the move for today. I hope that everyone had a good day in the markets, even though it was a very red day. There's always money to be made, and thank you for watching, and just remember to trade your playbook and playbook your trades.